What's up, guys? Welcome to my YouTube channel. I'm not sure what I'm gonna name the YouTube channel yet, so I don't really have anything to go off of. It's my first YouTube channel. A little bit about myself. I'm almost 20. I'm a profitable trader. I trade for a living. I also have a business, but I primarily trade. And this channel is to just educate people. I actually have a friend who asked me, he has no idea about the markets at all, right? He wants to start trading. And I was telling him, it's not very easy to trade. You're going to lose money, right? This is what I tell everyone, right? Anyone who asks me, because they ask me, what do you do, right? I have friends, I'm still in college, right? They ask me, what do you do? Like, how do you not go to work? Well, I trade. So they think it's very easy, like you just, you buy, sell, right? They think it's that easy. I mean, in reality, it comes down to buying and selling, long, short, whatever. But I always tell them, be prepared to lose money. Be prepared to either spend money or spend time. You're gonna be doing both, honestly. But so this channel is really just, I guess, to educate people on how to trade. My main viewers are probably gonna be the friends who are asking me how to trade. So let's just get started. Alright. So I just have this random little notepad open here to demonstrate some basic market ideas. So what I'm gonna go off of is something I like to use. So this is just consolidation. So consolidation in trends, right? Trend trading. Easiest type of trading, in my opinion, is trend trading. Just because price is going up, you long, likely you're gonna make some money, right? But you have to know your entries, proper stops, right? If you don't tell your stops properly or your entries, you're going to get stopped out, and then price is gonna go in your direction, right? So let's see. So let's say price is going up, right? No, that's a bad line. Let's say price is going up like this. That's an uptrend, right? Now where do you enter? Do you enter here? Do you enter here? Do you enter here? It depends, right? So let's say the price is just going up, trending up, right? Now we hit some sort of rejection, right? What do you do here? A beginner might think, oh, this is the start of a downtrend, right? No, that's not really how it works. Let's put that back. So this is our initial rejection. At the initial rejection, what you pay attention to is where price moves in here. So this is very simple. I'm keeping it simple here. Let's say price is in this area, right? Shit, this is a bad line. Okay, I'm not the best artist, but this is what I'm trying to say here. Okay. We have this rejection area, we have the support area, so what we can call this is consolidation. So price moved up, now it's consolidating in this area. Now, when do you enter for a long position? Most people think you enter here, right? I mean, because you look here, here, and here, here. You enter here. What if price comes down? You're screwed. This is a bad entry. There's no guarantee price will bounce off here. There was no guarantee of bounce here. There's no guarantee of bounce here. This is just observing the market and making a decision. So we don't enter there. Do we enter here? No. Price could reject, go down, right? Price could break out in your way, right? But then it could come back down. See, the proper entry for a trend trading in the direction of long bias, right? So we're assuming we're in a trend. Trend identification it's pretty easy and difficult at the same time, right? But generally, the market's trending. So if we're trending up, we have a long bias right now. So you don't enter here. That's just the answer. You don't enter here. Why? Price could break out, go in your direction, right? But generally, price will come back down like this. So people will enter, they will enter here a lot of the time, or they'll enter around here. It's not the worst idea because I see why you'd enter there, right? You'd think, okay, we're going up, right? We're going up. Now we consolidate. Now we're gonna go back up, right? But that's what everyone else is thinking. What that means is once you enter long, you want to set up a stop, right? You want to get stopped out if your idea didn't work out. Generally, what happens after this uptrend here is price comes back to test the previous support to see if there's going to be continuation for a further long. This means price could come down here or even go down further. So you're gonna get stopped out of your position, and then you're gonna be like, oh, why am I not profitable if I was able to have the right idea? You had the right idea, but you had a wrong entry. Generally, you want price to come back down when you're in this area right here. You want price to come back down to test the previous resistance. Now, what you look for is either a bounce off here or a breakdown, not fully down back here, but generally maybe halfway through for an entry. And what you can do here now, you can get a better entry here because you didn't enter back here when everyone thought it was going up. You entered now when the price comes back down, people are exiting the positions. They're trying to short, right? Again, they're trying to follow some sort of scalping, some sort of like short-term trend, but that's not what you do. You wait till price comes back down, you find a proper entry, and you can set your stop at a more reasonable area. So now you're gonna get stopped out down here or here. Now there's a way higher chance price will break out here. And if you want to be a little bit more conservative, what you can do is, this is another good idea. This was the initial breakout, right? This area initially broke out. Now we're rejected here. Now what you want to see is, is price going to reject again here, or is it going to break out? You could enter here. This is a little bit less risk to reward because chances are it could come back down and test again, just like we did here, consolidate a bit before the true breakout, right? Now, this doesn't only apply in the long direction. Let me just erase all of this. You can also short. So let's say we're in a downtrend, right? Price is coming down. You don't just randomly short. You're gambling, right? That's what most traders do. That's what most new traders do. They like to gamble. They don't want to, look through the market, see previous areas of interest. That's why I have this pulled up here. Only about 1 to 3% of day traders are able to consistently outperform the market. 97% of people will be better off just buying stocks. That's why I tell everyone, if you don't want to put in the time to trade, you're not going to be successful. Very few people are successful. The people who are successful are people who learn, study market trends, put real money on the line. You always have to put real money on the line. If you don't put real money on the line, paper trading, that doesn't work. Paper trading never works. I've tried paper trading. It's just because you know that money, no matter how much you want to think that money is real, you know the money's not real. So there's no true risk. You need true risk. Okay, anyways, back to the lesson. So let's say we're in a downtrend, right? So price is coming down. Now it bounces. Again, a lot of new traders, a lot of them, are gonna try to catch the falling knife. You've probably heard that before. That means price is coming down rapidly, right? Sometimes price comes back up rapidly. So people want to be right. They want to be at the low. They want the best deal. You're never gonna get the best deal in the market. That's not what you're out to get. People try to get the best deal, trying to catch that falling knife in hopes that price will bounce up and they can make some quick money. That's not how it works. This is not going to work in the long term, because usually when we're in a downtrend or an uptrend, right? But we're looking at downtrends right now. When we're in a downtrend, price is going to continue to trend downwards. So a lot of people are going to enter here. What's going to happen? Price might come up, bam, further down immediately. This is an invalidated trade. They tried to long here, maybe here, whatever. It doesn't matter. Price just came back down. They if they had a stop, stopped out. I hope they had a stop. Again, you need to be using stops. When you're futures trading, you need to use stops. Price can infinitely move down, right? Anyways, risk management is a whole different topic. We'll talk about that. But so don't try to long. 100% don't try to long. We're in a downtrend. You can see there's downtrend right now. We're in a downtrend. Don't try to long this. And don't try to short at this area. You might think, oh, price rejected, now let me short. there's no guarantee price keeps coming down. You have to wait for some consolidation to happen. We had a rapid down movement. Let's say whatever, this was 100 points down. We just had a 100-point downwards trend, 200, 300, whatever it is, just for this example. Price needs to consolidate a bit before heading back towards the direction of the trend or reversing. Trend reversal is something else. Trend reversal is, let me just quickly show you, let's see. Trend reversal is price is trending up, right? And then chop, 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 right? Our consolidation area, and it just comes back down. After this uptrend, it comes back down. That's not very common. Generally, price continues trending for quite a while before there's a reversal. So trying to catch reversals is not the best way to trade. You're gonna have a very low profitability trying to catch reversals, right? Just try to trade in the direction of trend. You can try to take trades in reversals. I do that. It's a very high risk but high reward if you catch it, right? Because no one's expecting it. That's a whole different topic. I would say reversals are generally for people who have a lot of experience in the market. But anyways, back to like the topic of this one. So downtrend, right? Price rejects, price comes back down here, right? The initial zone of the little reversal, right? Whatever you want to call this. Bounces back up, bounces down. Now, when do you know when to enter, right? Do you enter when price breaks down? No, you don't enter when price initially breaks down. That's the initial break. What happens is people will enter here. They'll be like, oh, price broke this area of interest, right? It broke it, so we want to enter here. Now, you don't want to enter there because if you enter here, generally you're going to set your stop right here, right? Price will come back up. Most of the time, price comes back up to test this area of interest. It was previously the support for this consolidation, this mini consolidation, whatever. It generally comes back up to test that, if not a little bit higher, to come back down for the true move, right? Now, this is a very simple example. All of these are very simple examples. Chop doesn't always look like this. Chop can go like up, down, up, down, up, down. You need to figure out where you draw your lines, where you figure out areas of interest. There is no perfect method to trading. It's more of a, you look at the market, you learn how price works in certain areas, and then you trade off that. This is just a very simple idea. It's a profitable idea. If you know how to implement it, it takes practice. You're not going to be profitable. Your first time trying this out, it could go terribly wrong. It will likely go terribly wrong. That's understandable. That's okay. But this is how markets generally trend to move. They trend, consolidate, head back in a trend. Sometimes they trend, consolidate, reverse. Yeah, so when you enter, generally my entry is right around this area, right around when it comes back to test it, that this area of testing, like I'll be like, okay, now shorts got burned, right? Because people that tried to short it here, they got burned, price came back up, hit their stop, they got burned, right? Now they're looking to long, maybe they're doing something else, I don't really know. But once price comes here, I tend to short, set my stop at the previous rejection here. That's another area of interest, so I'd set it right there, right? So price generally comes back up here and continues on the downtrend. Now, the way that I can demonstrate this is I can pull up a chart. These are 3 trades I took, right? So, the way I took these trades were, and just don't get like scared once you look at the chart. Like, this looks very simple, right? But then when you look here, you're like, where do I see trends? How do I identify trends? How do I identify trades? When do I know when to enter, right? There's so many questions to be had because, I mean, this looks messy. I will admit it looks messy, right? I can immediately just like search for a trade, like if I demonstrate to you guys. So let's look at this side on the left side right here. So price rejected right here, right? And price came into a little bit of a downtrend right here, right? So a lot of traders, what they would do is they see this downtrend, right? This is what they would think is maybe a mini flag, right? They think, okay, price bounced here heavily, went up, and now it's going to consolidate and break back out. They had the right idea. Traders here had the right idea, but you know what happened to 99% of traders in this area? What they did was, once price broke out right around here, the breakout, right, of this, you know, this little wedge, little downtrend, flag, whatever you want to call it, right? Looks different on different time frames, but this is the 15-minute. I tend to trade on the 15-minute for day trading. It kind of keeps chop to a minimum. But anyways, they would look at this breakout from this downward trend, and that's the right idea. That's definitely the right idea. But look, as soon as it broke out right here, it swung all the way down here. A lot of people would have set their stop around here, or maybe midway through, they get stopped out. And then immediately price moves up how much? So we're move up from 500 to like, wow, like this is a very, 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 very good trade. It's just people with the right idea, wrong entries, they got burned. I mean, if they set their stops here, this would have been a 3. I would have set it up here because this is, I have these drawn out as support and resistance areas. I don't like to use just lines for support and resistance because it can come down, up and down, like, you know, in that area, right? Anyways, this could have been a 3RR trade, a very good trade. The issue is people tried to enter off that first breakout. This is not the way to trade. You need to let that break out right here. So if I can draw it, this all happened in a very small area in 15-minute time frame. It came down here and people got stopped out of this trade, whatever, right? So they thought, oh, okay, price might come back further down. They might have tried to short. In that case, trying to catch the falling knife again, they would have got burned very quickly here. But notice that price broke out, came back down, came back up, and then here you see this wick right here. It tested this trend line downwards before making the true move up. So had you taken this trade off that retest, you would have had a very, very, very good trade. Okay, so enough of just trying to read the charts here. Let me just show my examples of trades that I personally took. So I believe this initial trade right here was a loss. Let's see right here. Test, chart the long. Yep. So this is an example of what not to do. So I took this trade here. I assumed, this is small time frame trading, right? I assumed price. Notice how price was rejecting here. Initial reject, second reject, broke out here, right? Initial reject, second reject, broke out here, this area, came up, came back down. I thought this trade would retest this area and potentially break out further ahead. Now, I was wrong. But the thing is, I set up a stop. I moved on from that trade. I didn't try to catch this downtrend here. It didn't make sense, right? You could have longed off this previous area of support. I didn't do that. My initial long got burned, so I didn't even want to take that trade. I wanted to look for a better trade. Okay. So my second trade was a short. So you see this area right here and this area right here. So price rejected here first. It rejected. So that is a good sign for a short. It was initial rejection, right? Second rejection here, right? Now, I'm trading a reversal right now, but you can do it as a beginner. It's just a little bit harder. This would have been an easier trade for a beginner. You just trade it with the trend upwards. This is a little bit harder of a trade. It's still very doable. So first rejection, second rejection, whole area is consolidating. Someone could have had the bias to take a long here, right? You could have, that wouldn't have been a bad trade. You could have tried to long off this previous area of rejection that it seemed to be building off support, but all the longs got invalidated once you probably break out about here, maybe even here. You should have not taken that long anymore. But going back to my personal trade from this day, I took the short off this second rejection here, wrote it down up to this previous area of interest, this back. If I scroll back all the way here, you see it was a rejection. So I took this as a potential that it might reverse here. So I exited my long. This was a good trade. I believe I made, what is the RR? About a 4 RR off this trade. That's very good risk to reward. Took this trade. And then I still had that further short bias because, in my opinion, we were entering a downtrend now. We were breaking out of this area. I took my short. I noticed we came very far down. Now, you see there was a little bit of a tweezer, a little bit of a double test before a quick buy up back to this area, right? And I took this trade right here. This was previously had been a support, supported all this area through here, right? This little consolidation, it was a support for it. But this was a sign of a potential downtrend. This buy up here, back down, got sold off, bought up again. So look at these tests. Initial test, it was a good test, right? A high test. The second test didn't test as high, that's showing weakness. So I took that trade off that second test being lower and had a very, very good a exit for this, right? So I had a why can't it let me click? It's because I'm pen. Alright, so I had this like little slim, if this doesn't work out, exit the trade kind of thing here, because there was a chance, because I saw strong buying, that price could, parabolically move up. So I made sure to set this up right in between, right under, I believe, that initial test, yep. And I had a very high RR for this trade. If it didn't work out, it didn't work out. I already made my money off this trade. This trade was an aggressive trade because I believed price would at least come back down to this area where the candle closed. Right now, this is all things I noticed off the market trends I like to identify, right? So I thought, okay, price could come back down. Very high IRR trade. Price did come back down. It exited me around here, I believe, and I didn't take another trade, another short. I did believe I had 2 good trades for the day, and I'm a strong believer in once you have a couple good trades for the day, you need to exit the day, right? Don't get greedy, don't overtrade. You're gonna get back your profits, right? Someone could have thought, oh look, this is a long opportunity. Maybe I could have even thought that, right? There was a low, a higher low, so maybe a potential for a long, right? Who knows? But price immediately slammed back down to this second area of interest right here, this previous support right here, and then it just went further down. Anyways, so this is a implementation of my favorite trading method. Very simple trading method. It can get more difficult once you're into live markets. You're looking at these wicks, you don't know what any of it means, but you need to have this idea of markets moving in trend, markets consolidating, and markets following through, right? So you want to take your trades when the market follows through in a trend, right? So thank you for watching my first video. I really don't know what I'm gonna do with this channel. I'm probably just gonna do like medium to long form content on trading education. I will have maybe an email, maybe a Telegram, Discord, something where people can reach out and ask me questions, because I'd like to help, as long as it's a manageable question, a manageable request. I can't trade for people. I can, I can't tell you what to do. I can only give you the resources, right, as a profitable trader, and try to help you be a profitable trader as well. But yeah, thank you for watching.